So lately, I've been seeing a lot of homes that have reverse mortgages go into foreclosure. It is very important, especially if you have older parents or you're elderly yourself, to know exactly what is a reverse mortgage and exactly how does it work and how you can possibly save yourself from going into foreclosure if you have a reverse mortgage. So jumping right into it, what is a reverse mortgage? So a reverse mortgage is typically for people who are 62 years or older. And what it allows you to do is borrow money against the equity of your house. So all you're basically doing is converting your equity into cash income without making any monthly payments. Sounds pretty sweet, right? And of course, to qualify for a reverse mortgage, not only you have to be 62 years of age, most likely your home need to be paid off. And if it's not paid off, you have over 50% worth of equity. So you need a lot of equity. So it sounds sweet. In a traditional mortgage, you're paying your monthly payment, but on a reverse mortgage, the lender's paying you. How about them apples, right? So there's usually 3 types of reverse mortgage on how you can get the cash. The first one is either a lump sum. Second is monthly payments or term payments. And then lastly, you have a line of equity. So those are the 3 most common ways you usually get the cash out in a reverse mortgage. Moving forward, jumping into the ways that you can get foreclosed on in a reverse mortgage. In a reverse mortgage, of course, you're still a homeowner, you're still on title. And of course, being on title, you have requirements. The reverse mortgage company has requirements of what you need to do to keep that loan intact so that way they won't foreclose on you. Number 1, you have to keep paying your property taxes. If you do not manage those property taxes, you're going to go into foreclosure. There was a situation where I went to a house of an older gentleman, Asian guy, like myself, and he was going into foreclosure. And he couldn't figure out, like, man, he was going crazy. Like, what are you talking about? I have a reverse mortgage on the property. The property is in good condition. I'm doing what I need to do. And come to find out, he didn't pay the taxes. And it wasn't his fault. He let somebody else pay his taxes. Somebody that was in charge of his account to pay taxes, and the person just forgot to pay the taxes. And therefore, it was been a while, so the mortgage company called the loan due. And the moment he fixed that, boom, it stopped the foreclosure. So be careful, put your taxes, make sure you're aware and pay your taxes so that way they won't foreclose on you on reverse mortgage. Number 2, maintaining the property. So that is super, super important. You have to maintain the property. Condition is everything. Now the lender's paying you, so the lender want to make sure that the money that they're lending you on that house still is a viable asset. And if you're not taking care of that asset, the condition do play a role in real estate. The value is going down because nobody's going to pay top dollar for a house that needs a roof, that needs hundreds and thousands of dollars in repairs. You need to keep up with the property. So they do check, they do come by, and they want to make sure that the house is in great condition and still looks good. So that way your house can continue growing, appreciating in value. The third way you can go into foreclosure in a reverse mortgage is not paying your home insurance. That's another thing, just like the taxes. If you're not paying insurance on your property and you have a reverse mortgage, after a while, that mortgage company is going to foreclose on you. Because again, they want to protect what? Their asset. They're giving you money now, which is borrowed from your equity. It's the assets. What happened if a hurricane comes along and blows that property away? They lost money. That money is not protected. So that's why they want to make sure you're actively paying your home insurance. And that's part of your contract as well too. They're letting you know, hey, you have to take care of the property condition. You have to pay those taxes. And also you have to pay that insurance. Another way your property can go into foreclosure is if you pulled out a home equity line of credit and you did not pay that back, you're going into foreclosure, my friend. They can foreclose on you. So those are debts as well. It's another mortgage. It's in the form of a second mortgage. You have to pay that. That's another way you can go into foreclosure on a reverse mortgage. So make sure you pay back any money that you borrowed. Another one that a lot of people may not know about. So in a reverse mortgage, sometimes it's 2 people. Let's say husband and wife. Wife passes away, or somebody that they're not married to. That person passes away, and that was the initial person who did the reverse mortgage. If that other individual was not on the loan or known to be able to live in the house after that person dies, that mortgage will be called due. And they can foreclose on you, which is crazy. So you actually, the main person, have to be living in that property, or you have to name somebody else if your spouse is going to be there, and the mortgage don't have to be under their name, but they have to be known as somebody who is protected if something happens to you in that property. It has to be, spouse or somebody, which is, crazy. So you want to make sure you let them know all of that information, because once you pass, that mortgage is due. And of course, how does the foreclosure process works in a reverse mortgage? The very same way as a regular foreclosure. They're going to go ahead and give you the notice. Between around 120 days, you're going to receive the notice of dispense to your house, letting you know that the court is filing a lawsuit against you for the amount that is left over, and you have to respond in a timely manner. If you don't, then you're in trouble. They're going to go ahead and proceed and go after and foreclose on that house. So you always want to respond if you're in that situation, right? Be on the lookout, read the mail, do not run. Respond. Respond only helps you. And if for whatever reason you did not mitigate or take care of any of the issues that's causing your property that is a reverse, that's on a reverse mortgage to go into foreclosure, they will proceed. Let's say they proceed and they get to the final step, then your property might go into an auction and be sold on that auction. Somebody buys that property, just like a regular foreclosure. So it's the same steps, regular. That's how it will go down. And then you will have to leave the property because you no longer leave the property. You no longer own the property. We don't want that. We don't want that. We want to make sure you're on point. That's why I'm giving you these tips. Keep these tips in mind if you have a reverse mortgage. And how do you prevent all of this from happening? Simply, like I said, pay your property taxes on time, maintain the property, ensure that you have home insurance coverage, pay any lines of equity. Make sure you pay those lines of equity. If you have a eligible co-borrower, make sure they're on there, they're known. If something happens to you, pass away, that person still can go ahead and live in that property. And lastly, you have to occupy that property as your primary residence. If you follow those, you'll be all right. And if you do have a reverse mortgage and somehow you receive a letter of foreclosure, if you check the things that we went through, and you get that resolved, you will be all right. And if you have further questions, please contact a professional that knows exactly what they're doing, or that can, provide you with the best options to go ahead and help you. Hope this video was super helpful. Catch you on the next one.